tuning into Talking Point. I'm your host, Neeraj Shah. Quarter 2 numbers for a bunch of companies on the tech side gave fairly different and varied indications about how business is shaping up for them. And therefore, we thought today's conversation with our guest, who is Chintan Thakkar, the CFO of InfoEdge, should be as much about how InfoEdge as a business, as a conglomerate of businesses, if you will, is doing or thinking about the future, as it is about the bricks or the model that they lay out behind choosing their investments. If you think of it, viewers, InfoEdge was probably the earliest of angel investors in a bunch of tech-based businesses that we know of. Their model is now getting proven right multiple times over. And with the larger balance sheet and a larger cash at their disposal, it'll be really interesting to see how they see now the opportunities that stay before us over the course of the next few years. Chintan, great having you. Thanks so much for joining in. Hope all is safe.
Yep, everything is fine, Neeraj. I hope the same for you. And thanks for having me on this show.
Now, the pleasure is ours, Chintan. Can I first start off with the basics about how, for example, the first half has been for you? Because I think there is call it a confluence of factors, but it's very rare to see real estate and IT, both of them doing so well together at the same time. And I think that puts two of your premier businesses in the sweetest of spots.
Yeah, particularly in Q2, if you talk about, I think, and then it's IT and real estate, both are firing at a high growth rate. But if you look at Q1, it was recruitment business which was firing. Real estate was still kind of limping under the impact of second wave, right? But if I have to take it 2 quarters before that as well, and then you can see the trajectory that recruitment business right from last year Q3 has been kind of growing and gathering momentum, right? And not only you can see from our numbers, but also from the numbers that started coming from, particularly from the IT industry around the attrition and things like that, right? So I think that momentum was there. It continued in Q4. Despite second wave, if you look at our operating metrics, a number of searches that were being done and some of the other metrics like that, we saw that momentum continued, right? Despite the second wave as well, and of course the Q2, we have seen a high rate of growth over there. So I think certainly I can see a clear trend line when it comes to recruitment. In real estate, it is little bit patchy. Its Q4 was great. Q1 again, it was impacted because of the second wave. Q2, we have seen good signals. We can see green shoots. And again, there also, if you hear the commentary coming from mortgage businesses, housing finance companies, and all, I think they are very similar. So we have all the reason to believe that this trend will continue in real estate as well.
Yeah, actually, that was going to be my question, Chintan. From all indications, and when I speak to IT CEOs, this hunt for talent, while it may be cyclical, it is still likely to last for at least a couple of quarters as per them, and maybe longer. Real estate seems to be at the start of, or just at the very nascent stages of what seems to be a slightly longer term upcycle, because we haven't seen something like this for a really long time now. Does this therefore give you the belief, if not the confidence, that things for those two businesses at least look set for a decent medium-term uptick for InfoEdge?
Yeah, you are very right. I think all the trends that we are seeing gives a reasonable belief that yes, maybe I think this is going to be there for at least a couple of quarters. Of course, now there are this discussion around wave 3 and on the stuff like that. So I think I'll put a caveat over there. But see, real estate is more of a local thing, right? So any local event will have a much larger impact on that, right? Recruitment is actually a global trend, right? So what has happened is that globally, all the companies have started, making their digitization processes faster, right? Even the traditional companies, the non-tech companies, have started at least putting some of their processes. Let's say, if nothing else, then let's say customer service, right, or logistics. They are all getting, digitized, right? So that's creating a trend. The other thing that's creating a trend, on the recruitment is also that the domestic tech as well as non-tech company, they have also started hiring tech talent. So it started with all tech. If I look at again the trend line, it started with tech. It was led by tech. But now it's going across the non-tech industries as well, the non-tech talent as well. So it is now a very secular trend. No matter what industry, no matter what city, no matter what skill set, even inside of tech, we are seeing that that's a very secular trend. So it tells us that there is a real gap of demand and supply. And my personal belief is that this will last for a longer period of time.
Got it. So how, and before we come to some of the others, so therefore, just Chintan trying to think about this. Q2 saw great business uptick, also saw higher ad expenditure for you, as a result of which the operational metrics, while solid, did not probably, how do I say, maybe hit 90% of the mark that people were expecting you to. Maybe it came in line with your estimates, but I'm just trying to figure out what the street was thinking of.
Different vertical, right? So for recruitment business, because given the the leadership position that we have, the clear leadership position that we have, we don't have to really spend too much on the advertisement, right? So I think that, and you can see from the numbers as well that if you look at the cash EBITDA coming from that business has actually sharply risen. Right? We were always 50% plus, but it's now in the range of 60% cash EBITDA, right? So we can see that that's going up, right? Because with every incremental increase in business, because there is not too much of a variable cost, it adds to the margin, right? In real estate, because it's green shoots right now, because it's also that it's more competitive business. We still at an early stage of investment, right? So we still need to invest in brand. We still need to invest in pulling the crowd to our sites. So that spend will go up if the market is kind of momentum increases. We will have to match with the additional advertisement spend as well. Right? So that would probably be in tandem with the rate of growth. I wouldn't think that it will kind of surpass that. But yes, but that investment would continue. The reason why you are seeing that the cash probably was not up to whatever the expectations were, and I'm not very sure what the expectations were, but I think there is a third business, which is matrimony, right? Matchmaking. That Jeevansathi.com, there we are still at a stage where we are heavily investing behind the brand, because there we are number 3 over there, right? So we need to be doing few things differently. So there we are investing not only from the promotion side, branding investment that we are doing for a short term as well as for a long term, but it's also in the top line because of the there's an heavier discounts and all that, right? So there's an investment happening through top line as well. So if you really kind of break down vertical wise, then you will see that the cash burn that has happened, it's mostly in this Jeevansathi.com. Real estate business is at least kind of a break-even type of business. Recruitment business is cash cow for us, is generating a lot of trade. Education business, actually, that also is kind of showing very good trend. Right? So surprisingly, if you see it even during COVID time, it has been kind of growing. Of course, it's a smaller business for us, but it's kind of looks like that it's hitting a sweet spot. It's growing faster and it's profitable as well.
Actually, Chintan, a quick follow-up question. So Jeevansathi is now established, so to say, even though you're number 3 out there. Naukri, as you know, the other leaders, but the other two are seeing some definitive global trends coming in, wherein suddenly prop tech seems to have been taken center stage in India. A bunch of these new businesses getting into prop tech, and the valuations being compared to what happens globally. Even for education, right? I mean, Byju's notwithstanding, a bunch of others are trying to do something similar out there. You see in the IPL, when the advertisements largely coming from some of those players as well. So my question is, how do you envisage the businesses to evolve, both the both 99 acres, and is there a possibility of that becoming a slightly more enhanced portfolio, if you will, because you may see value there. And then, of course, the other piece is the education piece. How do you see that moving ahead?
Well, you are right, that we are seeing a lot more value that's getting created, whether it's in education. Of course, Byju is on content side and we are on the classified side, but even on the education classified side or as well as the, the property side, right? But, the thing is that, recruitment business, is still showing a lot more steam, so it's actually all the businesses are kind of growing, it is right. So as a proportion, probably it will still remain the same. Right? So it's not that if 70-75% of our top line comes from recruitment business, I don't see that changing very fast, even if the business starts doing much faster.
No, sorry, I didn't mean that. I was just trying to understand. Sorry, Chintan, let me rephrase my question. Do you believe that, let's say, for example, education classifieds, do you expect that the nature of the business could change a bit because everything related to education and tech certainly seems to have taken center stage in terms of valuations? Do you think that you would add a couple of other verticals to that piece, or does it continue to stay as is?
No, right now we think that all the 4 businesses, they are all critical to us. They all have huge potential of creating billions of valuation for each of them. So we think that our hands are full on that.
Okay.
It's highly unlikely, I wouldn't say impossible, but it's highly unlikely that we would right now want to venture into a 5th vertical. We would also not want to venture going outside India and even in these 4 verticals and trying to see what more we can do, because we think that there is enough growth opportunity, there are enough challenges over here, there's enough potential over here. So we will continue to be in the same mode. Having said that, yes, we may invest in a different way. It could be some of the financial assets like what we have for all of the financial portfolio that we have investment. We may invest even in the adjacencies of these 4 verticals. And expand our management bandwidth through this investment or experiment through some of these investments. So there could be strategic investment, strategic stake that we may take in some of these startups which are relevant for our 4 verticals, right? And try to see if we can grow through them. So that investment can happen, and that again would be tech centric, as you said.
Okay. Yeah. So I got my answer. You might look to enhance the offerings for each of these verticals through some newer things as well. Okay, yes. Great. Okay, great. What about the success of the investee companies? You've tasted fabulous success with both Zomato and Policybazaar. What are the newer things that you've done, and where is it, or which of those as verticals or as themes are showing a lot of promise, Chintan? Can you give us some insight there?
Yeah, that's very exciting. So it's just not about Zomato and Policybazaar, but if we probably have now about 25 active investments, either directly through our balance sheet or through our AIF that we launched, right? They are still, I would say that they are still at an early stage because most of these investments started from 2016-17 onwards. But they are definitely showing very promising kind of results. At least if I go by the kind of demand that they are generating for their further rounds and the valuations and all that, so and the operating metrics that we can see that we are very excited about some of the investments that we have done. It's very hard to put one theme because we have not really gone by a particular theme or vertical in that. We are far more grounds up. We see how the team is, how the idea is, and then we kind of go behind that. Rather than saying, hey, we want to go in this particular, vertical or this particular line of business, and then find out who are the guys over there and go and invest behind them. So we really don't do that. It's more of a grounds up, right? But some of the B2B platform that that we invested around 2017, 18, 19 time frame, I think right now they are showing a good promise because they all have now 2 or 3 rounds kind of done with them. So they are showing good promise. And B2B suddenly has become kind of flavor of the month, so to say. People have kind of realized the strength of B2B marketplaces and all that.
Yeah, no, the reason why I ask is because typically when we talk about Info Edge, we talk about the 3 or 4 premier businesses which are known and not as much about some of the others. So, okay, one last question on that before I actually pick your brains on the other side. But just one last question on this. Are any of those businesses which you started investing in, say, 2017, 18, which have now started showing promise because of the other rounds, are any of these growing at such a fast clip that we might see another Zomato or another Policybazaar coming out from Info Edge stable in the next couple of years?
Yeah, we really hope so. There are 5 or 6 such investments, and we really hope that, and all seem to be doing well. We really hope that some of them at least would be able to go to till the stage of IPO. Some of them may fail as well. I mean, that's part of life. But we are really very optimistic about the investment, that we have been doing.
Okay. Chintan, how are you guys approaching this whole valuing a tech business, a tech-enabled business? Maybe the nature of the business could be whatever. It could be fashion, it could be property, it could be education, it could be marriage, whatever it is. But how are you approaching making an investment into some of these? I mean, hypothetically, what are the valuation metrics that you give the utmost importance to when you are doing it? Whether you're making a small investment or you may be coming in at a slightly later stage and making a slightly larger investment. But what are the few things that you're watching out for? Because quite frankly, the opinion on the street is very varied and yours could be varied too. But would love to understand from you because you guys have had a fair degree of success in some of these.
Look, as I said that we go so early, we are kind of pre-series A, right? So it's very, very difficult to really value a business because most of the time it is just some spreadsheet and some, right? So it's very difficult to really value at that point in time. So basically you are valuing the team, the idea, their capacity and tenacity to kind of make a big business. So you kind of give a number because they are putting their career, and they're all bright people, they are putting their career, right? So you kind of begin with that. Right? So early stage, it's very, very hard to, and it's more of an art than a science in terms of valuation. At a late stage, as you kind of start, going, but yeah, coming back on the early stage, see nowadays, because there's a lot of competitive pressure, the market is really putting a value to it, right? So you are left with really no choice, in some ways to say, right? Because we have seen even the large players like, Sequoia's, have come out with Sequoia Surge and all that. I think even the large players have seen the value in investing early or catching, entrepreneurs early and being with them throughout the journey. I think that's what is optimizing the entire value creation chain. So people have started coming much earlier as well, right? So I think that's kind of people discover the valuation through that. But as I said, that it's still more of a art than a science, right? At a late stage, what starts happening is that it's very hard, for somebody to look at the DCF type of method and say how much cash flow that this business will generate, because tech business, have a very different curve. If you really see some of the tech businesses even globally, right? That for many years they've been making loss and then they start making profit. Now, what typically happens is that you are really valuing an IP and not really cash at the early stage, right? So valuing IP would also mean is that you are foreseeing future 5 years, 10 years, 15 years down the line, right? And like it said in tech industry that there's this Moore's law. It says that every 18 months, your computing capability doubles, right? So similarly, there is a kind of an exponential ratio in terms of cash generation, in terms of the top line growth because of what's happening in tech, and what's globally the tech adoption is. So I think that's kind of generating a kind of a scale where it's possible for you to double your profits in 2 years, 3 years type of time frame. So that's what people are valuing, and because it's so much subjective, that's why you see a different trends. Certain value, someone says that it's highly valued, but there are enough of people who are saying that, hey, I think 10 years down the line, you look back and you think that this was really cheap, and why we didn't invest. So that's why it's very subjective.
Yeah, Chintan, one last question. I wouldn't want you to comment on any company whatsoever, but I'm just trying to understand from you. So when people are assigning, say, a 15 billion, a 10 billion, 15 billion, $20 billion valuation to a business which probably will have, say, 1,000, 1,200, 1,500 crore profit in 3-4 years' time, is the bet the same that it is still probably early stage, the profits may be low, the cash flows may be low, but then suddenly they'll take a quantum jump? I'm just trying to understand what would people typically be thinking. Again, this is not an answer for any particular business. Simple clarification.
Yeah. So look, people who invest in our stock, and we meet the investors and we talk to them, and there are two-way dialogues, right? So what I really understand from them, because they are the one who are really valuing us, they are not the one who are valuing, right? Is that there are people with different time horizon, right? There are people who are just looking at saying, hey, what's going to happen in a year's time, 2 years' time, right? But there are enough people whom I meet, they are talking about 10 years, 15 years kind of a time frame, right? So when they start looking at that, and then they are saying that, hey, what's the disruption that you have caused? What's the size of market that's potential to be done? And when they do, as I said, that then the exponential, stuff starts, hitting you, and then it starts multiplying at a much faster rate. So I think depending upon different time horizon, people have different answers to what the right valuation would be, right? So all the estimates that you talked about, that's again a point of view of some people, right? That may not be the people who are right now buying high valuation stock, because they might be looking at what happens in 10 years, 15 years down the line. If you look at start valuing a brand like, let's say, Zomato or Paytm, right? I mean, every no matter what age or what group you are in, everyone now knows brands like Zomato or Policy Bazaar or Paytm, right? And it's there, it's the highest recall value, right? So those are the biggest brands that have been created, the biggest distribution muscles that have been created. So if you look at traditional FMCG business, I don't think it's just about the product, right? Anybody can make that product, but it's the distribution muscles that they have. It is the brand that they have, right? So people are ascribing different value to brand and distribution and the IP like that. So it's just not about tag, but the other software things that you are building around that tag. I think that gets valued.
Interesting. Okay. Thanks so much, Chintan. Lovely insights into multiple things, including how InfoEdge could be a couple of years down the line as well. So thanks so much for that. And wish you and yours a very safe December and a great 2022.
Thank you, Neeraj. It's always great to have conversation with you.
Yeah, likewise, Chintan. Really appreciate your time.
Thank you.